Hi, my name is Alan Ratafia, and I'm the managing partner of Ratafia and Company CPAs. And I'm often asked by my clients to help them set up a new company for the business they're going into. And they often ask me, well, which entity should I select and how should I do that? And my goal in this video is to help you make the right decision, not only based off of what is the right legal entity to get into, but really what is the right operating structure for you tax-wise to make sure you save the maximum amount of taxes. Now, I am fully aware that there are significant legal considerations for each entity choice. However, for the small business owner, primarily the tax benefit is the key consideration because that's the one that's going to put money in your pocket. Now, I often hear from attorneys who love to recommend LLCs. And they may be very good legally and flexibly, but they are punishing for tax purposes. The problem is that we often have to get clients afterwards who come to us who set up their LLC, who we then have to fix it because they didn't realize how expensive they are tax-wise. So the attorney who you're using may be a very good attorney, but they may not be realizing how much extra money that LLC they're recommending for you to use will cost you in taxes. We don't want that to happen to you because they're not the ones who are putting food on your table or putting money into your pocket when it comes to taxes. Okay, so again, we want to use a real-world situation. The amounts of money that are going to be in your pocket, the tax structure is what we're going to consider in this video. Basically, there are four main entity structures that you should know about. The C Corporation, the S Corporation, the Limited Liability Company, and the Sole Proprietor. The first one, the C Corporation, you should pretty much toss that away. That's not an entity structure that you want to be operating in. It's very expensive tax-wise. It's really only intended for large companies that are forced into using it because it's so expensive tax-wise. For you, as a small business owner, there are three other choices to consider, and one of them is the Limited Liability Company. This one we also don't like to recommend because it is very expensive tax-wise, and here's what I mean. So for example, let's say that you are a consultant and you have $150,000 in revenues, and your business has $50,000 in expenses. So you have a $100,000 profit, just to round off a nice easy number. Well, that $100,000 profit will actually show up on your personal taxes, and you'll pay taxes on that personally. The Limited Liability Company doesn't pay any tax as an entity, rather it passes through to you as an individual, and you pay the tax on that, and that's okay. Okay, so let's say the tax on that is $20,000. Well, 20% of $100,000 you'll pay on your personal return. All right, not great, nobody wants to pay it, but you do. The problem with the Limited Liability Company is that in addition to that regular ordinary income tax, you have to pay Social Security tax on top of that. And that adds up to another 15% or $15,000. So you could be paying the 20% as just a nice round number plus another 15% or $15,000 in that scenario. Now if you run your business for 10 years, you know, that's a lot of money that you're burning that you don't really need to. Another alternative, let's compare this to the S Corporation. The S Corporation is basically the same thing as a limited liability company when it comes to its legal structure and liability protection for the most part for a small business. Let's use the same scenario. A $100,000 profit would actually pass through to you individually, and you're going to pay that same 20% or $20,000 on your personal return. The difference is that 15% Social Security tax, you can avoid that or significantly reduce that. Now that is a tremendous amount of money to save. If your business makes more profits, you'll save even more. If your business makes less in profits, you'll save a little bit less, but still the numbers are staggering. Okay, so the Limited Liability Company will force you, under most circumstances, to pay in this penalty of Social Security tax, while the S Corporation totally lets you not pay it. Now you might be asking yourself, how can this possibly be true? How can this be? It is true. The reason is that the profits of an S corporation are classified as dividends. And if they're classified as dividends, they're treated as unearned income. Therefore, you don't have to pay that extra Social Security tax on it. Now, in our practice, we use a balanced approach. We sometimes tell our clients who are S corporations to pay some Social Security tax by managing it properly and using a balancing act. We're always very careful to make sure that our clients are protected and in good shape. So we don't necessarily have them pay zero in, but what we have them pay in is dramatically less than the full boat that the limited liability company would force you to use. So if you're listening to this video and you're saying to yourself, oh my goodness, I have an LLC and I realize I'm getting crushed in taxes, what do I do? You can change your LLC to an S corporation for tax purposes without actually changing or forming a new company. So there is a special election that you can make called an entity classification election, which will allow you to retain your LLC as it is legally, but treat it for tax purposes as an S corporation. So you may want to consider that. Okay? In addition, the LLC is okay under certain circumstances. Usually you want to use an LLC, let's say, if one of the owners of your company are foreign, non-US people. Okay? That's one reason to use it. Another reason to use it is, let's say one of the owners is putting in more money significantly than the other owner of your company, and you want to distribute profits in a different ratio than your ownership. But remember, using an LLC means that you will pay that Social Security tax, 15%, even under those scenarios. The only way that you can avoid paying the 15% Social Security tax, that extra surcharge penalty, with an LLC, is to use the LLC if you're in real estate. So if you're going to be operating a real estate company, and it depends on how you set it up, but if you're going to operate a real estate company, using an LLC would be okay and would not have the additional Social Security tax, because profits from a real estate company, depending on how it's set up, are treated as passive income and are not subject to the earned income rules, thus not subject to the Social Security tax. The final entity that we'll discuss is the sole proprietor, and in general you don't want to use that either unless your profits will be less than $25,000. The sole proprietor still is a big audit risk because everything is reported on your personal return, the sales and the expenses, and the profits are subject to your regular income tax plus the Social Security tax. So it's definitely not a very good tax structure at all. But if your profits are very little, let's say below $25,000, it probably makes sense to use it, that even though you're going to pay those taxes, it's worth paying those taxes rather than setting up a whole new entity, having an accountant prepare those returns, filing all that, and going through the cost and expense of working in that way when you don't need to if you're operating a small. So once you have selected your entity, there are a plethora of tax maneuvers that you should be making. So selecting the entity is part one. Part two is, now let's take advantage of those tax savings. So you have the ability, by using an entity like an S corporation, to shelter a lot of income, even if you're not making a ton of money. Some of the strategies that we employ are deferring income, prepaying expenses, determining when to draw salary and how much salary to draw, when to make estimated taxes, whether you should put money into a retirement plan or not. These are all great tax savings moves that are easy to do, and if done properly, will allow you to lower your taxes, but without getting yourself into trouble with the IRS. Basically, the goal is to have you pay the least amount of taxes possible while still knowing you can sleep at night. Look, this video does not cover every topic about this, but it covers the core topics, the issues that we deal with all the time. If you have any questions about what we talked about, if this raises any more questions for you, or you just want to talk, you could feel free to contact my office at any time. There is no charge for having me help you with any questions that you have. Thank you and good luck.